Effective technical analysis. Training changes everything completely. Only true professionals make money in financial markets. Most investors trade relying purely on their luck. Actually, charts reflect the deepest fears of masses. Price action is current analysis of past behaviors. Focus 10 data to predict future price movements. Technical analysis is a lens for understanding market psychology. Reading signals in charts gives investor great power. Fundamental analysis measures financial strength and growth prospects. Technical analysis determines entry and exit timing. Instead, line charts only provide information about closing price. However, candles present 5 different data points simultaneously. A candle clearly shows opening and closing prices. It also indicates daily high and low levels. Green candles represent bull dominance in the market. Price closes at a point higher than opening. Red candles show that sellers took the control. In this case, price falls below opening level. Start by saying, I am learning the stock market today. Path to success goes through a disciplined strategy. Candle body represents range between open and close, which show price peaks during that specific period. Upper shadow tells how much buyers pushed price. Lower shadow reflects depth of selling pressure instead. A large candle body symbolizes strong price movement. Small bodies show low price movement in market. A long wick proves price rejection from levels. The situation can usually be signal of reversal. Candle periods can change from minute to year. Longer time frames provide more reliable main trends. The market is always battle between bulls and bears. Focus 10 candle structure to determine winning side. Most people think candles only consist of colors. Actually, each candle is an emotional snapshot of the market. If candle has no wick is Marubozu. This shows one side completely controls the market. Bullish Marubozu is where strong buying appetite starts. Bearish Marubozu can be first harbinger of crash. Using professional candlestick charts is essential. While analyzing, visualizing data will quickly improve decision-making process. Doji candle is clearest technical sign of indecision. Opening and closing prices are almost completely equal. Gravestone Doji shows price was rejected harshly above. This formation usually appears at end of uptrend. Dragonfly Doji proves lower levels were strongly defended. Buyers made a comeback to take the control. Hammer candle is a sign announcing the end of a downtrend. The long lower wick shows buyers are back 10 stage. Inverted hammer formation represents upward effort in market. It tells price tries to escape from bottoms. Hanging man candle signals end of an uptrend. Its appearance is same as hammer but tops. Shooting star is bearish formation with upper wick. Rejection of high prices can bring harsh pullback. Bullish engulfing is strongest. Confirmation of a reversal. Green candle completely covers previous red candle instead. Bearish engulfing proves market pass to the sellers. Red body pulls down by engulfing green body. Critical support. Resistance levels. 10 charts are psychological battlefields. Never forget these areas where buyers and sellers concentrate. Support levels are floor points where buyers push. Price usually gives reaction when reaching this level. Resistance levels represent ceiling areas where sellers concentrate. Price always experiences difficulty in surpassing this area. Most people think these lines are only mathematical. Actually, these are collective investor memory of players. When support level breaks, it usually becomes resistance. Former resistances are new support points after breakout. Levels tested many times in past are reliable. Area is stronger as more contacts exist there. A strong breakout usually requires high trading volume. Volumeless breakouts can produce false signals, deceiving investors. Whole numbers are natural support and resistance areas. Investors are psychologically prone to trade at these levels. Trend lines are basic tools, determining general price direction. Create support line by connecting lows in uptrend. A trend line will break as it is tested. Usually a harsh breakout occurs at 6th attempt. RSI indicator shows overbought or oversold market conditions. Above 70 level usually tells price is expensive. Below 30 level proves that price remains cheap. These areas are opportunity doors for professional investors. RSI divergences are most secret signs of reversals. You must be careful if indicator falls while price. A matte indicator tracks momentum and strength of trend. Crossover of two lines can produce trade signals. Moving averages are dynamic support and resistances. In trend, price continues its way by getting strength from averages. Most people think technical analysis is future prediction. Actually, this is only art of managing probabilities. Origin of candlestick chart dates back to 1700s. Japanese rice traders were first people using method. Warren Buffett always says he never uses technical analysis, but this method is unrivaled for short-term trades. Only 3% of day traders win regularly. Perfect discipline is required to enter this minority. Price usually makes a pullback after resistance. Rejection this retracement is a safe entry point for smart investors. Bollinger bands keep 90% of price movements inside. Prices overflowing outside bands usually return inside. Again. Contracting bands are harbingers of huge market explosion. Low volatility periods always end with high volatility. Morning star is rarest and strongest reversal form. Middle, small candle shows balance between buyers and sellers. Evening star proves uptrend ended and crash started. This three-candle structure is favorite signal of professionals. Formation is likely to work as it is obvious because all players trade by looking at same point. Successful traders act with data instead of their emotions. Staying loyal to your rules carries you to freedom. Learning technical analysis is like deciphering market alphabet. Those unable to speak language are doomed to lose. Always manage your risk by using stop-loss orders. Market never forgives mistakes or excessive overconfidence at all. Combining technical and fundamental analysis is strongest strategy. Those interpreting data correctly build wealth over charts. You are completely ready to view market differently. Now start following candles to manage your own financial future. Subscribe now. Add value to yourself.